Fidelity National Financial, the title insurance and life insurance holding company, the largest U.S. title underwriter processing millions of real estate transactions annually alongside F&G Life's $74 billion annuity book.
FY 2025 revenue $14.4 billion. Q1 2026 title segment revenue $2.0 billion. Adjusted pre-tax margin 13.1%. F&G AUM $74.5 billion.
Fidelity National Financial was founded in 1847, one of the oldest title insurance companies in the United States.
FNF acquired Fidelity and Guarantee Life, F&G, in 2020 for $1.8 billion, adding life insurance and annuities to the title business.
F&G completed an IPO of a minority stake in 2022 and distributed 12% of its F&G shares to FNF stockholders in 2025.
Title insurance generates 60% of revenue. Fidelity National Title, Chicago Title, Commonwealth Land Title, and Lawyers Title processing residential and commercial real estate transactions nationwide.
F&G Annuities and Life contributes 40% retirement and protection products, including indexed universal life, fixed indexed annuities, and institutional flow reinsurance, with $74 billion in AUM.
FY 2025 revenue $14.4 billion. Title margins expand when purchase volumes recover. Adjusted pre-tax title margin of 13.1% in Q1 2026 showed improvement.
Q1 2026 title revenue $2.0 billion, margin 13.1% up from 11.7%. F&G AUM $74.5 billion. Title margin target 15 to 20%.
First American Financial and Old Republic International are the other major publicly traded title underwriters. FNF holds approximately 35% national market share, the largest single player in U.S. title insurance.
Stewart Information Services and DOMA compete in title technology and efficiency. In annuities, F&G competes with Athene, Global Atlantic, and Jackson National, all benefiting from the retirement income wave of aging baby boomers.
FNF's advantage is title distribution density. Decades of agent network relationships and underwriting data create a defensible position in real estate closings, where trust, speed, and claim reserves matter as much as price.
FNF operates in all 50 U.S. states. Fidelity National Title, Chicago Title, and affiliated underwriters cover every major real estate market from New York to California, with commercial title strength in top metro corridors.
F&G Annuities distributes through independent agents, banks, and broker-dealers nationwide, with institutional reinsurance agreements adding international exposure through treaty arrangements with global life insurers.
Mike Nolan has served as CEO of Fidelity National Financial since February 2022, a 40-year FNF veteran.
Nolan has navigated FNF through one of the most volatile title cycles in decades: the pandemic boom, the rate-driven slowdown, and the margin recovery, while building F&G into a $74 billion annuity platform.
Fidelity National Financial, the title insurance and life insurance holding company, $14.4 billion in FY 2025 revenue, with 35% U.S. title market share and F&G's $74 billion annuity book.
Q1 2026 title adjusted pre-tax margin 13.1%, up from 11.7%, expanding toward the 15 to 20% target. F&G AUM $74.5 billion, FNF's dual platform strategy building value.
Fidelity National Financial is the largest title insurance company in the United States, controlling approximately 33% of the domestic title insurance market through its FNF brand and subsidiary network. Title insurance is a legal requirement for nearly every residential and commercial real estate transaction in the U.S. It protects buyers and lenders against defects in property ownership histories. As a result, FNF's revenue is directly correlated with the number and value of real estate transactions occurring in any given period. When mortgage rates are high and housing affordability is constrained, title insurance transaction volumes fall. When rates normalize and transaction volumes recover, FNF benefits substantially.
Revenue for Q1 2026 came in at $3.226 billion, above the $3.613 billion estimate. However, this comparison includes the F&G annuity business, which is a separately run subsidiary. Earnings per share of 93 cents missed the $1.09 consensus by 15%. The miss reflects continued suppression of residential real estate transaction volumes. Existing home sales in the U.S. have remained at multi-decade lows as high-rate homeowners are reluctant to sell and give up sub-3% mortgages. This lock-in effect is the primary structural headwind facing FNF's title insurance business.
The CEO structure at FNF is worth clarifying for investors. F. William Foley Sec is the executive chairman and the dominant strategic and governance figure at Fidelity National Financial, having built the company over multiple decades through a series of acquisitions. The day-to-day CEO function is led by Mike Nolan at the title insurance business and by Chris Blunt at F&G Annuities, the separately traded subsidiary. Any CEO verification for FNF should focus on this dual subsidiary structure rather than assuming a single CEO narrative.
The lock-in effect in the U.S. housing market is the defining challenge for FNF's title insurance business in 2026. Approximately 60% of outstanding U.S. mortgage balances carry interest rates below 4%, many at rates between 2 and 3%, originated during the pandemic era of Federal Reserve accommodation. Homeowners with these rates have no financial incentive to sell and take on a new mortgage at current rates above 6%, even if their housing needs have changed. The result is historically low inventory of existing homes for sale, which directly suppresses the transaction volume that drives FNF's core revenue.
F&G Annuities is the growth engine that has partially offset the title insurance headwind. FNF acquired a majority stake in F&G in 2020, and the annuity business has grown substantially as rising interest rates made fixed annuity products more attractive to retirees seeking guaranteed income. F&G manages approximately $50 billion in assets under management, primarily fixed index annuities and multi-year guaranteed annuity products that benefit from higher crediting rates. Ironically, the same high interest rate environment that hurts FNF's title business benefits F&G, creating a natural hedge within the FNF portfolio.
Title insurance technology is an area where FNF has been investing to reduce its expense ratio when transaction volumes eventually recover. The company has deployed automation for property research, title chain analysis, and commitment issuance, processes that historically required significant manual attorney time. Digital closing platforms and remote online notarization capabilities allow FNF to process refinance and purchase transactions with fewer staff hours per closing. This technology investment means that when housing volume recovers, FNF should see operating leverage that is greater than in prior cycle recoveries.
The commercial real estate title insurance segment, which covers office buildings, retail centers, industrial properties, and multifamily developments, has been a mixed picture. Commercial transaction volume declined as office property values fell, and interest rate caps on floating rate debt created distress in certain segments of the commercial market. However, industrial and multifamily commercial title volumes held up reasonably well, partially offsetting the weakness in office and retail. Management has indicated that commercial title revenue stabilized in Q1 2026 and may begin recovering in the second half as interest rate expectations improve.
The pent-up demand in the U.S. housing market is substantial and represents a meaningful catalyst once mortgage rates normalize. The National Association of Realtors estimates that 3 to 4 million home sales per year are being suppressed by the lock-in effect, transactions that would have occurred under normal affordability conditions. As rates decline, even partially, the release of this pent-up demand could drive transaction volumes above trend for several consecutive years, creating a supercycle recovery for title insurance volumes. FNF, as the market leader, would capture approximately a third of that incremental volume.
Valuation at FNF is challenging to assess in a depressed transaction volume environment because normalized earnings are materially higher than current earnings. On a through-cycle basis, normalizing for a recovery to approximately 5 million existing home sales per year versus the current 3.5 million, FNF's earnings power is estimated by analysts at approximately $4 to $5 per share annually. At those normalized earnings, the stock would trade at approximately 8 to 10 times which is a significant discount to the current price when applied against projected recovery earnings. The risk is that the recovery takes longer than expected, and that the F&G annuity business faces its own headwinds if rates decline rapidly.
Key metrics to watch at FNF: existing home sales velocity from NAR monthly data, purchase mortgage application trends from MBA, F&G net new annuity sales and assets under management, and any commentary on commercial real estate title volume trends. A sustained recovery in purchase mortgage applications, which lead title insurance revenue by approximately 30 to 60 days, would be the earliest leading indicator of an FNF fundamental inflection.
The title insurance lock-in effect is one of the most underappreciated aspects of Fidelity National Financial's competitive position. Title insurance is required for virtually every real estate transaction that involves a mortgage, and state regulations require premium rates to be filed and approved, creating a standardized pricing floor. The major underwriters compete on service speed, agent relationships, and geographic coverage rather than price. FNF's network of title agents, over 20,000 strong nationwide, represents decades of relationship investment that new entrants cannot replicate quickly. When transaction volumes recover as mortgage rates eventually moderate, FNF's embedded agent relationships ensure it captures a disproportionate share of the rebound.
The F&G Annuities subsidiary is a genuinely differentiated component of FNF's investment thesis. F&G writes fixed-indexed annuities, which have seen surging demand from consumers seeking principal protection in a volatile equity environment while still participating in market upside through index-linked crediting strategies. F&G's assets under management have grown at a compounded double-digit rate since FNF acquired control of the business, and management views the annuities segment as a complement to the cyclical title insurance revenue. When title volumes are depressed by high mortgage rates, F&G's spread-based revenue provides diversification. The two businesses have an inverse correlation that smooths FNF's consolidated earnings through the cycle.
The leadership structure at FNF is worth clarifying for investors. William Foley, the founder, serves as executive chairman with a significant ownership stake and remains the dominant strategic force behind the company's capital allocation decisions. Mike Nolan is the chief executive officer responsible for day-to-day operations and financial management. This dual leadership structure has been in place through multiple cycles and is well understood by institutional shareholders who follow the company closely. Foley's track record of value creation through this model, including the FIS and Black Knight transactions, has earned substantial credibility with long-term investors, even as some governance frameworks flag the non-standard arrangement.
Everything on Charged Alpha is financial education and analysis, not personalized investment advice. Past performance does not predict future results. Always do your own research, understand your risk tolerance, and speak with a qualified financial advisor before making investment decisions.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.